Hey, what's up, everybody? This is Andrew from Dividend Growth Masters. So today I want to talk something a little bit more basic in terms of dividend investing, and it really involves your portfolio in terms of how you're building it. So I want to talk about the U.S. Stock market sectors and how you should kind of be thinking about the different sectors when you're constructing your dividend portfolio. So there's about 11 or 12 different market sectors in the U.S. Here they are listed out on Fidelity and their market performance as of the most recent day. So when you're building a dividend portfolio, one of the things that you want to consider is diversification. You don't want to put all your money into energy stocks. You don't want to put all your money into healthcare stocks or financial stocks. So you want to make sure your portfolio is well balanced. So I want to talk a little bit more, I guess, on a high level of the pros and cons of some of these market sectors. So as a dividend investor, you'll probably be putting most of your money into 5 or 6 different sectors. So I want to talk about those ones first. So the first one is communication services. And these companies provide a very stable service to consumers and businesses. So you have companies like, AT&T, Verizon, Sprint, Charter Communications, those kinds of stocks. And they typically pay a decent dividend. And then you have consumer staples. So these are companies that provide goods that people use on an everyday basis. So you have companies like Colgate. They provide toothpaste, paper towels, floss, dental products, that sort of a thing. And consumer staples are a very good stock market sector for dividend investors because, like I said, they provide typically low-cost products that a lot of people need to use. So even during a recession, people still need to buy their products. You still need to brush your teeth. You still need to floss. You still need to buy paper towels for your house, that sort of a thing. So that's why consumer staples is generally a sector in which a lot of dividend investors are putting their money into. Financials is typically another good industry for dividend investors as well. So these are, for the most part, they're primarily dominated by banks, but there are other financial companies as well. Banks typically provide a decent dividend yield, typically in the 1 to 1.5% range, maybe 2%. But the industry is a little bit cyclical because they are influenced by interest rates, so keep that in mind. Information technology, that's the tech sector. So you have companies like Microsoft, Google, Amazon, those sorts of things. So the tech sector is also, I would say, it's one of the higher weighted sectors that people put their money in, especially dividend investors. Now, the issue with technology companies is they're typically priced in terms of valuations a little bit higher than the general market. So that's something to keep in mind. Real estate is also a very good sector for dividend investors. So you have things like REITs, real estate services, that sort of a thing. But it's mostly primarily REITs. And REITs are good for dividend investors because they typically pay out very high rates just based on the fact that they have to pay out, they're required by law to pay out most of their profits as dividends. And then you have utility companies. And this is probably the classic real estate, this is probably the classic dividend investor sector because utility companies, these are companies that are providing, electricity, water to consumers and businesses. And as a result, their revenue and income stream is very stable, so they pay very high dividends, typically between 2 to 5% on average. So those are probably the sectors that you'll want to focus most of your time in. I do want to highlight a few other different sectors that you should be aware of. One is consumer discretionary. So these are typically things like luxury goods, very expensive, industrial goods, that sort of a thing. Like cars, luxury handbags, that sort of a thing. So the issue with consumer discretionary is they're very cyclical. And if you watched my last video, I typically like to avoid stocks like these in the current market cycle that we're in right now, because we're probably closer to the top than the bottom. And these stocks typically get hit very hard during a recession. Energy stocks. So these are things like your oil and gas companies. So the issue with energy stocks is they can be very volatile due to changes in the underlying commodities. So changes in gas prices, changes in oil prices can have a very big impact on these stocks. So that's something to keep in mind when you're investing in this sector. And then finally, there's materials. Typically, I like to avoid this type of industry. These are things like your gold miners and stuff like that. I like to avoid it because they have a lot of exposure to commodity prices, which I don't like, because it can add a lot of volatility to those stocks. Anyways, this is just a quick overview of the different market sectors in the US. If you have any questions or comments, leave a comment in the description below. And if you want to learn more about dividend investing, be sure to check out my website, dividendgrowthmasters.com, or check out some of my online courses. I'll put a link in the description below. Alright, I'll see you guys next time.